press my record button here too. Wanted to make sure I told Brandon, don't forget to hit his record button too. So, all right. So let me do one more thing. I was in the middle of your introduction and I got sidetracked because I have to type in and get this thing on a couple of different places. So sorry about that. Trying to run all this at the same time. 1 second. Can't do multiple things at the same time. But, you know, I think that it's pretty cool that you were able to do that on YouTube, though, because I've been following you and I see, like, every time I Google, you know, apartment investing or something like that, that you're always popping up. So I don't know how you did it, but I know you got a good team behind you supporting you as well. So he's also, through his investment company, he controls over $24 million in performing multifamily assets all over the U.S. and has raised over $6 million. He's the author of the best-selling book, Financial Freedom with Real Estate Investing, which can be found on Amazon. So if you're interested, you can jump over to Amazon and purchase that book. And you can also purchase or listen into his podcast. So he's the host of the podcast called Apartment Building Investing. So if you're on iTunes or on an Android platform, pretty much anywhere you can find a podcast, you can find Michael's podcast. And so without further ado, I want to turn it over to you, Michael. I will be here in the background in case there are any issues, but I'm going to turn it over to you and have you go ahead and present to us about the blueprint to financial freedom with real estate in 3 to 5 years.
Awesome. I'm really excited to be here, Dan. Thanks for having me here. So we're gonna have a little fun with a chat box. So you guys are gonna get very familiar with the chat box on this thing. So appreciate all you guys being here. So today, you're in the right place if you guys want to be financially free with real estate. And that could mean a variety of things to you. For most people, it means quitting your job. Other people, it might mean shoring up retirement or paying for college, kids for the college. But most people really what they want is they want to be able to provide for their families and control their time. And that's really what we're going to talk about here today. So you're going to learn 4 secrets. You're going to learn the 4 secrets to doing this with apartment building investing specifically. And you're going to learn how to raise money. You're going to learn how to get your offers accepted, even if you have no experience or proof of funds. You're going to learn how to make offers. I'm going to show you how to do it in under 10 minutes. And I'm going to show you how to do your first apartment building deal in the next 90 days. And it's all to quit your job in the next 1 to 3 years. All right, sound good? Type yes in the chat box if you guys are ready to go. All right. Quick legal disclaimer because the attorneys make me do it. But basically what it's saying is that I'm going to give you some examples of people that have done some of the stuff I'm talking about. But it does not mean, guys, that is a guarantee that you're going to do the same thing. What I've found is that to be successful, you need a right mix of desire, a good plan, and a solid work ethic. So if you guys can agree on that, type yes in the chat box. All right, appreciate that. All right. So who here has read the book Rich Dad Poor Dad? Type in Rich Dad because there's a lot of yeses going on, which is great. Type in Rich Dad if you guys have read that book. All right, so fantastic book. It completely ruined my life. Okay, so let me tell you how. So I'll try to run through because some of you guys have heard my story before, but a lot of you guys probably have not. But I have a master's degree in computer science. So when I started out for programming for a government contractor, worked some time at America Online, and then joined this company, Web Methods. Long story short, in March 2000, we went public and put a bunch of money in my pocket, and I thought I was the man. So then I read this book, the Purple Book, and it completely changed everything that I was thinking about finances and business. And my plan was really to start a software company. And I decided to bag it and throw my master's degree away and my 15 years of working experience up to that point and pursue financial freedom with cash flow. And so I decided, because I had some money in the bank, to quit my job and just do everything at the same time. So I started to flip some houses. I took I learned to trade stocks and options. I took an apartment building boot camp. But my big idea was to get into restaurants. Now, this is a little surprising to you, I know, but the reason I did that was because I was surrounded by a bunch of burger franchisees, and they're like, oh, it costs this much to open. And then you hire someone to run everything, and you sit back and count the passive income. That's exactly what I wanted to do. So the guy in the middle of the white shirt, his name is Chris. He was my operating partner. He is an experienced multi-unit restaurant operator, and I brought him on, and things were great we hit a pretty rough spot in the recession. Never really recovered from it. Long story short, I subsequently lost my IPO millions in this restaurant experience, and clawed my way out through real estate. And so my quest for financial freedom then started with real estate, but it was like so many other people, which was flipping houses. My problem was I didn't have any of my own money left. They were all deployed at the time. So I had to learn the art of raising money. And so we flipped a lot of houses. We flipped 36 houses in about 2.5 years. And actually, we were making pretty good money. The problem was I woke up one day and I was, gosh, this is a lot of work. What if I, instead of flipping and selling them, because once you sold it, the money stops. So I was like, I did some easy math. I was like, well, if I want $10,000 in income from these rental properties, and let's say I can get each property to cash flow $200 per month, which, by the way, and this is the Washington, D.C., Maryland area, is pretty hard to do, but I would need 50 houses. And I just spent 3 years flipping 36 of them. I knew how much work it was to buy all these things. And even if we were crazy enough to do it, managing all these things would be quite the challenge. I would probably have to create my own property management company. I didn't like that idea. And then if I ever wanted to sell them, I knew from experience that selling a portfolio of single family houses is really, really difficult. So I'm like, man, is there anything else? And then I remembered this apartment building boot camp I took back in 2007 as I was educating myself. And I was like, man, apartments. I went back to that training, and I realized that there was a lot of inherent benefits of apartments. One of them, which is a lot more passive. So with single family houses, it's kind of an unnatural act to get a manager to manage that house. Most people do it themselves. That didn't really appeal to me. But with apartment buildings, it's an unnatural act to self-manage. Some still do it. It's a mistake in my opinion, but it's still built into the business model to have a property manager do that. I can control the value of it. And this is one of the things I didn't like about single family houses. It was very dependent on the market. Market went up, it went up. Market went down, it went down. We saw that in 2008. With apartment buildings, though, I control the value. So I can have one red box on the left, and that is worth $1 million, and the box on the right is worth 1.5. Why? Because the income of the box on the right is higher than the box on the left. Therefore, it's worth more. That's how all commercial real estate is valued. So I could buy the box on the left for $1 million, fix it up so that it produces the income to the box to the right, and then I could sell it for a profit or refinance at a profit. That was really, really cool. So I can control the value of it. I really like that. Financing was a real problem with single family houses back in 2009, 10. Still is to this day. There's a limit to how much financing you get for single family house rentals, but for apartment buildings, I can get unlimited amount of financing. In fact, it's much cheaper, and I don't have to personally guarantee it. I really like that after having personally guaranteed leases on the restaurants. So I really like that as well. Raising money for all real estate is easier than any other business in the world. And what I really, really liked about it is that it was scalable. Okay, meaning that I could start small but get big much, much quicker. So I can get to my goal of $10,000 per income much faster, at least in theory. The problem I had is I had no experience and no cash. Now, we already talked about the no cash part. The no experience part, you might be saying, well, yes, Michael, but you flipped 36 houses. And the answer is yes. That's exactly what I thought too. I was like, I look at all this experience. So I would call this broker. I said, hey, broker, I'm the man. I flipped 36 houses. Can you send me some deals? And the first thing out of the mouth was like, well, that's great, the man. Why don't you send me your proof of funds and I'll send you more information? And I'm like, what are you talking about, proof of funds? I'm the man. First of all, I don't have any proof of funds. I'm going to raise the money, but I'm the man. He goes, well, but how many multifamily have you done? I was like, well, I haven't done any, but I flipped 36 houses. And it was mind-boggling to me. It just happened over and over again. So I got like no credit at all for all these house flips. And I realized I was starting over in the multifamily space. This was a real problem for me. Well, through the house flipping experience, I got into my first building. It was a 12-unit building in Washington, D.C. It was a little by accident. It was one through my wholesalers. And I was like, well, I went into a boot camp. I may as well do it. And I raised money for this deal. And it was scary when I got into it. I had no money. But I'll tell you what, that deal has changed my life forever because it had set me on a path to financial freedom that I was seeking. I didn't really understand the gravity of it at the time, but that deal has completely changed my life because today, as Dan said, I'm one of the leading authorities on teaching people how to syndicate apartment buildings. And I control about $27 million in assets. This number changes, every few months, which is great. But that's great for me. But what's really more exciting is I'm really passionate about helping people do their first deal. And we're going to talk about why that's so important. But I've helped students acquire over 2,300 units, totaling $86 million. And that's what makes me get out of bed every morning. And I finally found this financial freedom thing. But how it took me way too long, I lost way too money. And my mission is to really shortcut this for you guys on this call today. And so it allows me to travel when I want. We spent 30 days traveling the parks last year. This was my family. 4 kids from age 10 to 16. I have a nonprofit mission. This is Ronald Kaluuya there on the right in Uganda. So I've been to Uganda twice right now. And I do what I really love to do, which is teach. And so that's what I'm really excited to do right now. So there's a little bit background on me so you know kind of where I'm coming from, what motivates me. And let's get right into these four secrets, okay? So you guys want to do your first apartment building deal. Let's get started. All right, you guys ready to get started? Type in yes in chat box. Take a sip of water here. All right, so secret number 1 is how do I raise all the money that you want? Now, the first problem with the answer to this question is that there's a bit of a limiting belief that there's no money out there, or maybe there's money, but I don't know anybody with money. So let me ask you a quick question here, people on this call. If you have more than $25,000 of any kind of liquid or stocks and bonds that you're thinking, if you found the smoking hot deal, your own or someone else's, you can invest in that. Type in 25K in the chat box. Just type in 25K. Now, if you have 50K or more, type in 50K. If you have 100K or more, type in 100K. And if you have a lot more, just type in plus. We don't know who the big fish are, but type in 100K plus. All right, I'm seeing it kind of scrolling down here. See plus. Okay. All right, James, 10 million. That's great. You give me a call. We'd love to do deals with you. So when I do this exercise at a local RIA, and let's say there's 100 people in the room, there are multiple millions of dollars in that room. And why are people there? They're there because they want the same thing that we all want, which is financial freedom, and they're thinking real estate. So why not start there? Okay. If you don't want anyone with money, then go to your local RIA meeting and start building relationships with people there. Okay. Does that make sense? So the money is definitely out there. You just have to connect with them. And so that's number 1. Number 2 is there's this in people's minds. And by the way, this is going to be kind of the mind-bending webinar for you guys today, because there's a lot of people who are caught up on a lot of things about apartment buildings that has held them back for years. And this is why they don't invest in multifamily. One of them being the experience part, the problem I had, and the second biggest thing is the cash part. And so in the raising money part, they're like, well, this is great, Michael, but let's say I don't have a deal under contract right now, and I want to raise money. How do I raise money when I don't have a deal under contract? Well, it's pretty difficult to do. Now, let's say I start making an offer and I get lucky enough and someone actually accepts my offer. How do I now raise the money in the next 45, 60 days I have to close on? Well, I'll tell you it's very difficult. I wouldn't advise it. Well, see, I told you already, it can't be done. Can't be done, and they throw up their hands. So I'm going to show you the solution to this problem. You guys ready for the solution? Type in yes in the chat box if you're ready for the solution to this problem. The solution to the problem is what I call the sample deal package. Well, what the heck is that, Michael? Sample deal package is an investor package, and it's based on a real deal that you found from a broker. And it's got photos, it's got maybe financials, it's got maybe a rent roll, it's got maybe some projections, whatever, okay? The only thing that's not real about it is you don't actually have it on a contract. Now, you tell your investors this, but the point is you use it as a conversation piece. And this investor deal package approximates your first deal, okay? Becomes very real from you, and you're sharing this as a conversation piece to your investors. So here's how you use this sample deal package. Once you have this sample deal package, what you do is you talk to everyone, okay? That's a big thing. You talk to everyone, and don't think about it in terms of, I am going to raise money, I need to raise money. Don't think about that. Just become more intentional with your conversations with people and think about it more in terms of, I want to share my enthusiasm with other people. Hey, you're not going to believe what I'm getting to. I signed up with a mentor. I took a program or whatever. And I'm getting this multifamily thing. I actually toured the property. It's fantastic. Really getting above average returns, 10 to 15%. The minimum investment is $50,000, and I'm just really excited about it. And that's really all you're talking about. And all of a sudden, people will want to support you. They may want to find out more. So that's kind of what you want to do. And so what I mean by be intentional, I mean, don't, when you meet with your friends, your coworkers, your neighbors, or whatever, don't talk about sports or the weather or politics like we all like to do. Get the chit chat out of the way and steer the conversation to this. Okay, that's all we're saying. Be more intentional in your conversations. What you want to do is you want to get a series of yeses. What that means is you don't want to call up a former coworker you haven't talked to in 2 years and say, hey, Frank, I'm raising money for apartment building deals. I need $100,000. Are you in? They're going to go, Michael, what the are you talking about? No, right? No, I'm not in. I don't even know what you're talking about. Okay, so you want to, on the other hand, if you say, Frank, man, it's been so long, a long time. Do you want to catch up over a cup of coffee? And Frank will likely say what? Yes. Okay, so make sure that the answer to your question is always a yes. Because if you get a no, it's going to be hard to backpedal, and now you have a dead end, and you don't want that. So and what you're really doing in these series of intentional conversations is you want to get people to raise their hand, going, "Hey, this is really interesting to me, and I know someone who's interested, or it's me." You want to set a meeting, and in that meeting is when you use the sample deal package. And you talk about and you build rapport with that person. You explain to them why multifamily is a good thing, the team you've built around you, and then you pull out that sample deal package, and then it gives you something to talk about. What you're looking for, either at the end of the meeting or more likely in subsequent conversations, is you want verbal commitments from people, okay? And the verbal commitment is like this: hey, if you find me a deal that's substantially like this, I'm interested. I would be interested in investing $50,000 with you. Boom. Okay. Because now what we've done is we have now raised money in the right way, which means that I have financial commitments before the deal, number one. And if I can do that, now I can make offers with confidence, right? I mean, if you knew, let me ask you this. If you knew you had 5 investors at $50,000 each, how good would you feel about making an offer in $1 million building? How good? I mean, pretty good, right? I'm like, I got 5 guys behind me. Like, even if 1 or 2 drop out, I could probably replace them, right? You'd feel really good. So it raises your confidence up significantly. And the other thing it does is you can raise money in days. So you had this meeting 3 months ago. You'd stay in touch with Frank, and then finally get a real deal. And Frank, hey, I finally got a real deal. And he'll go, great, send me the deal package. He's not going to ask you, why should I invest with multifamily? Why should I invest with you? What are the risks associated? What about this market cycle? Those questions you already got out of the way. They might ask you some specific questions about the deal itself. You can answer those in a few minutes. And so now within a couple of days, you have your $250,000 raised. Boom. Isn't that a little bit better way to raise money? I think so. Now, some of you guys might be thinking, well, that's great, but I don't think I can actually do that. And I just want to give you Ben Morley, who you don't know from Aben, but I know him well, known him for a while. Great guy. But he was so hung up on the money raising piece. He goes, Mike, I love the whole thing about the multifamily, but I am not going to be able to raise a dime. I don't feel right. And in fact, I don't even want to take money from friends and family. I don't. And he overcame this, okay? Now, because of his mental gap in his brain, it took him 3 months to get started. But from that point, when he finally overcame it, and he overcame it with education, which led to skill, which then resulted in confidence. Just so you know, education plus skill equals confidence. And then all of a sudden he goes, you know what? I can do this. And in my mind now, the risk associated with that is much, much lower because of what I know now. It took him 90 days to raise $200,000. And then 3 months later, he actually closed on his first unit, which was a 9-unit up in Pennsylvania. So if Ben can do it, who explicitly said, I can't do it, anyone can do it. Now, and if the idea of raising money still scares you, I have good news for you. If you decide to continue your journey with me, I have something called the deal desk, which means that if you bring me a deal, now it's got to meet our criteria, but if you bring our deal, your deal will actually raise the money for you. So what I'm saying is I want to take the idea of raising money or money in general totally off the table. All right. You guys good with raising money? Can you guys at least visualize yourselves raising money? Type yes. Type yes in the chat box. Okay, awesome. Because this is big, guys, okay? If you can't see yourself overcoming this big problem of money, it's very difficult for you to be receptive to anything else. Another thing that people are really hung up on is, how do I get my offers accepted if I don't have any experience? And this is a big one because I certainly was a newbie, just like everybody else. And like I said, my experience with these brokers was like a lot of people. I call them up and I would say things like, hey, my name is Michael. I'm interested in purchasing multi-unit properties around $1 million with at least a 10% return. Can you send me over some deals? I thought that was pretty good. And immediately they would ask me for proof of funds. I'm like, I don't have any proof of funds. And the conversation was dead. I'm like, what is going on here? How do I crack this nut? Now I finally solved this problem, and having solved it and having other people seen it solved much quicker, I know the answer to that is actually education. Okay, that's problem number one, is you're sounding like a newbie. Okay, that's the biggest problem. If you sound like a newbie, you're gonna have a problem. For example, here's the example of education. Let's say I educate myself and I use this kind of script. Hello, I work with a group of high net worth individuals. We'd like to expand in the Atlanta market. We already have property management company XYZ on board, and we're continuing to build our team. I'm looking for deals in the $1 to $2.5 million range with at least a 7% cap rate. We're looking for stable value add deals, but no repositions. Is there anything you have in your pipeline that you can send over for me to review? You're like, okay, it's a little longer using some words I don't know, but here's kind of the three things that I'm doing. I'm using insider words like cap rate and reposition, okay? I have addressed the money part because I'm talking about working with high net worth individuals. I addressed the experience part because I'm talking about my team, specifically about a property management team. So as part of the education, you will realize that the language will help improve your lack of experience, and the building of the team also does. So another critical component is that you gotta build your team. So if you don't have any track record, then you talk about yourself in terms of your team. Now, let's say you pick Sam, property management company XYZ, and they manage 3,000 units, let's say in Atlanta. That's the example right now. Well, the chances are that whatever broker you call already knows them. So now the conversation to me goes, oh, Sam, a great guy. Oh, yeah, we've done a few deals together. And now they're not even talking about you. So this makes a huge difference, and I can guarantee you that you won't get asked for proof of funds if you do that. Recently there was a Nick from New York. He was really excited. He signed up with a program, and like, I don't know, 4 days later he went to his local RIA meeting, came back really discouraged. He goes, man, this is great. I'm so excited. I talked to 2 investors, and they immediately started asking me about experience, and I don't have a good answer except for none. And the conversation kind of fizzled. I said, Nick, dude, you got to chill out a little bit. Go through the program a little bit, get your language up, get your skill level up, and then your confidence level will go up. And when your confidence level goes up, the reaction you get from people is completely different. So he did it. A month later, he went back and he had gone through the program. He's analyzed a few deals. His language improved, his skill level improved, and his confidence with that improved. And he didn't get that. He talked to another investor and he took a meeting. And you can always judge someone. You can always judge your level of confidence by the reaction someone gives. So if you get asked for a proof of funds in your resume, that means that your confidence level is low and you're using newbie words, and you probably haven't built your team. So I actually polled some of our students here. This is Philippe. I asked them, I said, hey, Philippe, when you first got started, were you asked for proof of funds? And he says, no. And that's because Philippe is a very systematic guy. So he'll follow the system, and he'll go through the thing before he starts going out calling brokers. Now, Laura was a little more overeager. She says, as a matter of fact, in the beginning, I was being asked for proof of funds, and I asked her about it. And it's because I hadn't gone through your course all the way, and I hadn't built a team. But now that I have, it's not coming up anymore. Now, if you still think that this is proof of funds is going to hold you up, if you decide to continue your journey with me, I'll talk about it a little later on. If you decide to do that, I will take this completely off and give you a proof of funds letter. Okay? Again, what I'm trying to do is I am trying to take the entire lack of experience completely off the table. Okay? You can overcome your lack of experience by educating yourself. It takes 2 to 3 weeks. Okay? Done. And then you build your team. That takes no more than 30 days. Okay, you do it at the same time. Within 30 days, you will appear like you are an unbelievably experienced syndicator, and no one's going to ask you proof of funds. And if they do, I will help you with that. Okay, so that was secret number 2, lack of experience off the table. That sounds good? Give me a thumbs up. Give me a yes. Give me a yes in the chat. All right, awesome. All right, we got 2 more secrets to go. I know it's a lot of content. I hope you guys are keeping up. There's a lot of stuff that Dan's thrown at you today, and hopefully we can collectively move you to the next level. Secret number 3 is around how in the world, Michael, I hear you now. Okay, I understand the details are still a little hazy on how I raise money, but I can see how it can be done. And I also see that you got to do it right away and not wait till I have a deal on contract. And I see now that I don't need experience to get started. Okay, I get that. Now the next question is, well, how the heck do I analyze deals? Okay, so this is a great question. And I can tell you that it took me 4 hours when I started this, and I took my 2007, I was taking classes all over. It took me like, and for 9 months, I was literally looking for deals in Texas. And that's, it took me 9 months, and I probably analyzed 150 deals. That's where I developed the syndicated deal analyzer that some of you may already have. And so I didn't have the technique I'm going to teach you now, and I didn't have the tools that we have today also. But I have this thing called a 10-minute offer, and I'm going to show you exactly how to use it. You guys ready? Type yes in the chat box. All right. Now, let me get a quick warning here. Some of you guys might glaze over when there's numbers involved. But 2 things. Number 1, multifamily and real estate in general, by the way, is a bit of a numbers game. Okay, so you have to tolerate numbers to some degree. You don't have to be an expert. And number 2, it's not as complicated. So stay with me here. I'm going to go through step by step. Here's the process of the 10-minute offer. 10-minute offer, the problem we're trying to solve is how can I make my first offer in 10 minutes or less from getting the marketing package from the broker? Step number 1 is get the marketing package from the broker. Step number 2 is to adjust the net operating income, or the NOI, that is provided to you in the package. And in doing so, you will adjust the price, because as we all know, the higher the NOI, the higher the price, and vice versa. And step number 4 is make the offer. That's it, guys. Any questions? I'm just kidding. All right, here we go. So a little bit of formula here. A little bit of formula. So let's say I have a property, and the asking price is $750. The NOI in the marketing package is $60,000, and it's advertised at an 8 cap. So the formula is price equals NOI divided by cap rate. So $60,000 divided by 8 is $750. Everybody good so far? Type yes. No one's fallen off the chair, sleeping, overwhelmed. All right, awesome. So net income comping is $60,000, cap rate 8%, asking price $750. All right, now what we do next is we adjust this. Well, anyway, here's the formula. So it's the same thing I just did. Okay, now what we're going to do is we're going to adjust the NOI. Now, in the marketing package, as is normal and usual, the vacancy is always understated. 3% vacancy. Well, in our collective experience, we know that's actually 10% vacancy. Okay, same thing. Expenses are almost always understated. In this particular marketing package, the expenses are 38% of income. Well, we know from experience, wink, wink, because I'm giving you that experience right now, it's 50%. Therefore, the NOI is not $60,000, but the NOI is actually $45,000. Now what I do with this new adjusted NOI, step number 3, is I adjust the price. Okay, adjust the price because now the net operating income is not $60,000. It's actually $45,000. The cap rate, though, is the same. And the cap rate you get from the broker. If it's by some reason not in the marketing package, you call the broker and say, hey, what's the cap rate? They'll tell you because that's how they price the asset. Okay, so you get it from the broker and then you apply your formula. So now it's $45,000 divided by 8 is now $562,000. Okay, now you have an adjusted valuation. Step number 4 is to make the offer. Let's go through it again. Vacancy 10%, 38%, no. And so what you're doing here is you're having a conversation with the broker. Call the broker. Hey, Mr. Broker, this is a great deal. I love the going-in cap rate. Thank you so much. I took a look at it. There's a few things that I would adjust, though. On the vacancy, by the way, the vacancy is only 3%. In my experience, wink, wink, I found that vacancy is and bad debt and concessions, all that stuff is more like 10%. And then the broker was like, well, fine, what else? Well, and your expenses are 38% income. I don't know exactly what's missing in the expenses because I look at a lot of deals. I know there's something missing because the deals I'm looking at, they're always between 50 and 55%. Let me give you the benefit of the doubt and use 50%. So that then reduces the NOI that you have in the financials from $60,000 to $45,000. And at your cap rate, Mr. Broker, the valuation is quite a bit lower than asking. It's like 560. Is there any flexibility on behalf of the seller, or probably not? And there, my friends, is the 10-minute offer. What have we just done? Let's review. Not the steps, but the results. Number one, I didn't spend more than 10 minutes. I didn't spend more than, hey, Dan, how much time do we have? We have till, we have another, 45 minutes, right?
Yes, you have, you're from 9:30 to 10:45, so you got 45 minutes. And you have plenty of time for Q&A as well. So
that's great.
If you're watching, you have questions, make sure you put it into the Q&A box, and we'll make sure we ask those to Michael at the end of the presentation.
All right, guys. So hold off on the questions. I'll scroll so far down with all my guesses. I'll lose them. So wait till later. That's great. We got plenty of time for Q&A at the end. So you didn't spend more than 10 minutes doing the analysis. That's huge because, as you know, real estate is a numbers game. The more offers you can make, the more likely is that you can have a deal. So that's huge. Number two, you got back to the broker in a timely fashion. Now, I polled some of my brokers, and only about 25% of people on their buyers list actually respond to any given deal they send out. Holy cow. So you're now this newbie investor. All of a sudden, you're in the top 25% of that broker's list. That's pretty cool. And number three, you have made an offer. Yes, you did. Now, making offers in commercial real estate is a little bit different than in residential. Residential, you fill out your contract and you send it over. In commercial, it doesn't work that way. It starts off exactly in this way. It's a conversation. It's an informal offer. Okay, an informal offer via either a phone call with a broker or an email. Sometimes I even create a video of exactly what I'm doing here because the broker understands what I'm doing. I'm using his language. I'm using his methodology for achieving the price. He might disagree with my rules of thumb, though, and in secret, he definitely agrees with me. He's just trying to make the seller's number work, but he's like, yeah, this guy's good. He's right, too, right? And so now what you can do is you can make offers very, very quickly. Now, you might be wondering, it's cool, but how do I find these deals in the first place? Like, what's the best way to find deals? I know it's the top, who's wondering that next question, right? This is great, man. How do I find these deals? Type yes in the chat box if you're wondering that. Okay, that is an excellent question. It's actually surprisingly easier than you think also. A great source is, there's a variety of sites out there. For example, like loopnet.com. You can create your free account and you can find some deals on LoopNet. It's a great way to practice and find deals and help analyzing deals. But what it's really useful for, guys, is finding the brokers. You're going to find the number one source of your deals is going to be brokers. Now, I know you single-family house investors have learned about, yellow letters and probates and bandit signs. That's great. Save that for later, okay? Your key is going to be building relationships with brokers. That's where the magic happens, and loopnet.com is a great way to find brokers, and that's what you just make a list of brokers. And after you've educated yourself and after you've built your team, you then call them with a similar script that I described to you later, and then you get their deals from them, and then you apply the 10-minute offer. Okay, so that is your solution to the problem, and then you make offers. And you make offers once. So here's the thing. When you do this informal offer, and the guy falls off his chair laughing, that means that you missed the mark by a mile. Okay, all right, no sweat, not a big deal. I only spent 10 minutes on this thing, okay? And you just do another one. But sometimes what happens is the guy goes, well, okay, it's a bit lower than the seller wants, but why don't you put something in writing? When that happens is when you start formalizing the offer-making process. And at that point, you got to sharpen your pencil. You need a strong financial model, the syndicated deal analyzer being one of them, and then you make your first semi-formal offer with a letter of intent like this. The letter of intent is nothing magical. It's not even a contract. It's not even legally binding. It's a one-pager, plain English document that says, I'm buying it for this price. I'm putting this much down. I want this many days for due diligence. I'm going to close in this many days. Okay, the parties bat this thing around, mark it up a little bit. Once agreement is done, we sign this meaningless piece of paper and we hand it to the attorneys, and they will draft the purchase and sales agreement. Okay, that's essentially the contracting in a nutshell. It's pretty easy. What's not so easy is a lot of people are more concerned, oh my gosh, I've heard it's kind of hard to find deals these days. And I will tell you that it really, you know when it was really easy? In 2008 and 2009. That's when it was really easy, but everybody's so scared, no one was actually buying anything. So really, what we have found where I'm sitting is we have this deal desk where people bring us deals, and it's on fire right now. My peers, my other syndicators, they're on fire. Why is that? It's because people, and I've studied this greatly, who are the people doing deals? And it's the people with hustle. Now, Patrick Duffy, 26-year-old guy, did his first deal, a 69 unit, didn't have any money, but he had hustle. And the people who are hustle, even Philippe, these people have hustle. If you have hustle, you will do deals. It's that simple. So if you have hustle, that's great. If you expect to make a couple of offers and you expect to get a deal out of that, it's not going to work. Think 100 to 1. Okay, 100 10-minute offers, and you get 2 under contract and one of them closes. Okay, 100 to 1. Think that. Now it might be a little bit more, a little bit less, but that is the level of effort you have to think for. And it's a system. It's very much a system, and it's just repetition. Think about it this way: if you want to do your first deal in the next year, 52 weeks, you got to analyze 2 deals a week. That's 100 a year. How hard is that? Let me ask you this. Do you think if you knew how to analyze a deal and you had a tool to do it, do you think you can analyze two per week? Type yes in chat box. Right? Yeah, you can do it. It's not that much. It's just consistency. All right. So that was number 3. Now you know the 10-minute offer. It's pretty cool, right? Yeah. So number 4, I'm going to show you a few secrets around how you can do your first deal in 90 days. And I share this secret with you a little bit hesitantly because I don't like quick fix solutions. They really aggravate me a lot. The reason I'm doing is people are asking me, Michael, I love your 1-year plan to your first deal and your 2-year retirement plan, but you got anything faster? Like, let me get this straight. I have you on a 1 to 2 year retirement plan and you want something faster. Yes. So I'm going to give you some ideas about how you can actually accelerate this further. And let me just say, people actually do a deal in 90 days. This is Ed Hermson. He signed up for my program, and he closed his first deal, his 22 unit, within 90 days of joining the program. Now, I got to say, he's maybe in the right place at the right time. He got it through his property manager, so he got it through the team building process, and it got maybe a little lucky. Okay, that's fine. That's fine. This is not normal. Remember the disclaimer, it's not normal, but it can be done. But there are some things you can do to try to accelerate it a little bit faster. One of them is this: you could buy small. You can buy small. You can even buy, a duplex, for example. And I used to poo-poo this whole idea until I saw the effects of even the duplex. So, for example, this is Drew Niffen. I episode him in 27. He's actually president of Nighthawk Equity, our purchasing company right now. I've known him now for, over 2-3 years right now, but he was one of my very first podcasts. And he buys this 3-unit deal 3 months after deciding that he's going to stop the single family house madness. And then he did another one, 4 units. And then he did a 32 units after that. And then he quit his job. It took him 8 months. And it started with this little tiny triplex. And that is very, very, very powerful. And I see that over and over again in the law of the first deal. I don't know if we're going to talk about it. I will talk about it a little bit later on. This law of the first deal. That first deal is so unbelievably critical because if you can do your first deal, this is just based on several dozen podcast interviews, and that's why I really wrote this book, The Financial Freedom with Real Estate Investing. This law of the first deal is so universal, so powerful, because what I've observed is that whenever you do your first deal, as small or big, it doesn't really matter, within 1 to 2 years, people have quit their jobs just by doing that first deal. And it's very, very powerful. So go small. Now, the reason go small is faster because you need less money. You can probably buy, need like with $25,000 down, you can probably buy a duplex in a lot of metro areas in the United States. And you might either have it yourself, or it's very easy to borrow the money, or hard money lending. It's much easier. It's much easier to manage. Your profitability on a duplex is actually a little bit higher. You can get it on the MLS. I don't have to build a massive team. It's much faster to do. So think about going small if you want to go fast. I'm going to talk you out doing that. I want you to push your comfort zone. But if you're like, man, I need this done in 90 days, I'm ready to go, then think small. Another thing to think about is partnering. Okay, so you can partner in a variety of different ways. very powerful ways. So for example, you could be a deal finder. You can be a deal finder and bring it to someone like us through the deal desk process. You could be a money finder, right? If you have access to a network of doctors or attorneys, and you've educated yourself and you think that you can raise money from that environment, you can bring that person to us, and we will actually partner with you in that as well. And the result is exactly the same. You get equity in a deal, you get passive income so you can quit your job and you build long-term wealth. So partnering is a very fast way to do that also. You can just focus on either the finding the deals or by finding the money. That accelerates the process also. Or you could passively invest. Okay, that's actually pretty quick. You find someone you trust, you research that person, you look at the deal, and you make an investment, and now you're in the game also. Or again, you can be a money raiser, right? So those are different ways that you can get involved very, very quickly in the multifamily space. And this is why I like the multifamily investing, because you can get involved in so many different ways, and the results can be so fast and so meaningful and so life-changing. So let me ask you this. I mean, imagine, I've kind of put a lot at you here, but I want to ask you a question, because a lot of these things, if this is the first time you've heard me talk about this, a lot of stuff is new. And I know that going into this stuff, you're probably on the same page with me about financial freedom and real estate, but you were not on the same page with me about using apartment buildings as a vehicle to get there, for the reasons we talked about. I don't have the money, I don't have the experience, and my gosh, how do I analyze? And the questions are endless, right? But let me ask you this question. Knowing what you know now, type yes in the chat box if you think, now again, there's some details missing. There's no way I can teach you the entire thing in 60 minutes. We'll solve that problem in a second. But let's say you had the details filled in, but just from a hey, is it possible perspective, do you think you could do your first deal in the next 12 months? Type yes in chat box. Some details are missing. I get that. Right? Now, if I showed you, if you followed, let's go secret by secret, okay? Because let's say if you follow what I showed you in secret number 1, and you can raise as much money as you need for your first deal, either from your own network or from me. And then I showed you in secret number 2 to get that instant credibility if you have no track record. And you can use secret number 3 to make offers in just 10 minutes. And let's say you wanted to do a deal in the next 90 days and followed secret number 4. Do you think, for somebody who did not answer yes, do you think you can do your first deal in the next 12 months? All right, getting some people off the fence a little bit. So if that is you, I want to invite you to consider continuing your journey with me. All right. So is it okay if I just shared with you what I put together for you? Would that be okay? Type yes in the chat box. All right. I'm going to do a brief commercial, and we're going to get into a live Q&A. I would definitely want to answer all your questions, but there's some of you on this call who are now very intrigued by what I said, and you want to find out more. So I want to honor that as well. And I definitely want to get to all of your questions at the end of this call as well. So what I'd like to share with you is my program called the Ultimate Guide to Buying Apartment Buildings with Private Money. It's the most comprehensive course of its kind on the planet. It's a multimedia course. It's 8 hours of me teaching you every aspect of investing in multifamily with a special focus on raising money. We cover every aspect. I suppose raising money, because it's so central in world location. We cover everything else. We cover how do I find the area. Now, I assume, by the way, that you're going to be investing outside your area. That's my assumption. It changes how we approach certain things. How do you find deals? How do we establish the brokers? How do I build that A team? How do we analyze the deal with a syndicated deal analyzer? That's the second amount of time I spend. Analysis is absolutely key at all aspects of the syndication process. How do we make offers and negotiate offers? How do I get them accepted? How do I do diligence? How do I not lose money during due diligence? How do we finance the deal? What's the mechanics of getting to closing, especially with your investors? How do I manage the property manager to create value? And then how do I exit the investment down the road? So it's, if I were to sit down with you and teach you all this in 8 hours, my hourly rate is $1,000 as an $8,000 value on just the multimedia, on the online course alone. Now, the online course comes with a few core components which are really important, and I keep mentioning the syndicated deal analyzer, and it is absolutely important. You can buy this thing separately, by the way. In fact, it's probably at this point the most widely used multifamily syndication tool on the planet. And some even use it for other asset classes like mobile home and self-storage, mixed use, that kind of stuff. But it is an absolutely critical tool because it really helps you to do simple things very fast and more complicated things fast and accurately as well. Now, it's got this unique red light, green light system that this isn't a screenshot of that shows you at a glance if the deal makes sense. You know, I've been working on this thing for 7 years. I spent about $17,000 to develop this thing, and I sell it for peanuts, really. And I include it in the Ultimate Guide course. And because it's so absolutely critical, if you're not an Excel guy, it's okay because it's a lot easier than it might look because of the video around it and because I make it really easy to say, hey, you modify this cell and no touchy this cell. Okay, and we've now had we're probably on our 8th version now. We keep iterating these versions. So $129 if you bought it separately. We have a document library. You know, if you want a sample contract, that's in there. If you want a due diligence checklist that we use, that's in there. Do you want to see what an operating agreement looks like? In fact, we have 2 of them in there, and you can modify it and then give it to your attorney. Always give it to your attorney, but you can save about a grand just by modifying what we have in there. You can see what a private placement memorandum looks there. It's all in there. It cost me about $11,000 of the documents that are in there, and that is included. So that's $11,000 value. And then we have case studies. Okay, so we have a lot of case studies where you can, if I were to do this for you, hey, let me watch over my shoulder and watch me analyze a deal. We'll do a virtual tour with a video, and then watch me analyze a deal. If I did it for you, I'd probably charge you $1,000 per deal. We have 6 of that in there. Where I show you my analysis of the marketing package, profit and loss, G12, the SDA, and there's even some video on the property tour in there. So there's 6 of those, $6,000 value. So the multimedia course, the syndicate deal analyzer, and the document library, plus the 6 video case studies, a total value of $25,000. So it's a lot of value in that offering there as well. Now, a lot of you guys might be interested in, actually, you know what? I should have put the link on here. If you want to take advantage of this right now while we're talking, the URL is themichaelblank.com. So it's THE Michael, BLANK, themichaelblank.com/special, because it's kind of a limited time offer for everyone on the summit. So themichaelblank.com/special. I'll flash the URL in just a second, but I just mentioned if someone wants to take advantage of that right now, here's a way to do that. One concern I get a lot is time. How do I do this? How much time does it take? And can I do this? And 100% of people who sign up for this program have full-time jobs. Okay, Brad Tasha is an extreme example. He was a engineering manager, and an engineering manager working 50-plus hours, more like 60 hours per week. And he was on call as well. And he quit his job in 2 years doing this stuff. So if he can do it, anyone can do it. The minimum, though, that you need is 5 hours. That's like an hour a day. All right. So if you think this is important to you, you will find an hour time per day. Now, the one thing I want you guys to remember is the one thing is this thing of the first deal. And I talked about it earlier here. I guess a little bit out of sequence because I mentioned it, but I want you guys to focus. We're talking about your financial freedom here, and that's really, 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 really important. But I want you to boil it down to one thing, which is your first deal. That is really what I want you to focus on. Don't think about, oh, how many units do I need to use? That's just going to overwhelm you. Just whittle it down to the first deal. And that's, like I said, why I wrote this book. But let me show you the progression just so you understand. It's a progression of the law of the first deal. If you decided to use a duplex, if you do a duplex, and let's say it takes you, gosh, a long time to duplex, you're hemming and hawing, you finally do the duplex, the second deal will follow in rapid, almost automatic succession. It will not be a duplex. It will be around 10 units. The next deal will be around 30 units, and the next deal after that is about 50-plus units. Now, if you can do more than a duplex and you start at 10, it will still follow the same progression. And this has happened over and over and over again. And most people are done after the third deals. They will have enough passive income coupled with the acquisition fees to basically do this full time, and then it accelerates even more. Brad Tasha, I mentioned him about a full-time job, took him 2 years. Look at his timeline. 12 months to do a 12 unit. It took him a long time to do that 12 unit, but then look what happens. 5 months, the deal didn't get bigger, but the timeline compressed, and then he did a monster one, 4 months after that. Took him 2 years. He's one of my longest examples. We talked about Drew, 8 months. Tyler Sheff, you might recognize him. He's a podcaster, real estate guy. You know, I interviewed him for the book and also on the podcast. Took him 11 months. So 6 months, did a 4-unit. He actually moved in one of the units. And then 3 months did a 10-unit. And then 3 months did a 12-unit. And then he had a pipeline forming, and he quit he went full-time in 11 months. This is just 3 examples. I have more of them in the book. I don't want to bore you with them, but it is a universal, very, very powerful phenomenon. And in my material, I say financial freedom in 3 to 5 years. I want to be conservative, but honestly, no one has gone over 2 years yet. Joseph Gosling, another perfect example. So really focus on your first deal. Because of that focus, I focus all of my resources at that first deal. And so I want to give you some other bonuses, okay? Because I want to accelerate your timeline. And one of those bonuses is this instant credibility in a box. I alluded to it earlier, but if you invest in this program right now, if you need a proof of funds, I will provide you with one. And you can also add me to your advisory board and leverage, our 10-year, experience, and you get it just like that because now I'm on your advisory board. Okay, that's absolutely huge. I have a hard time putting a value on that, so I just put $1,500. But you don't have to come up with 10 years experience and just level ours. That's pretty cool. All right, bonus number 2 is this thing called the vision map. Okay, a lot of people say, well, what do I do? I do this course, but what do I do? And this answers that. And this is kind of our system we've built up over the last 3 years, working with dozens of students. What do you do in week 2? What do you do in week 3? What do I do in the first 30 days? Next 90 days? Next, what is the exact, the tactical way to get there? And if I were to sit this down and offer this as a service, I would charge you $2,000 for that, and we include that vision map in there. Bonus number 3 is a thing called a Dealmaker Mastermind. Okay, and what this gives you is kind of 3 things. It gives you access to a premium online community. You get discounts off live events, but there's 2 things that are important about that. One is you get feedback on your analysis. Analysis is so important. Let's say you go through it. How do you know you're doing a good job with it? Well, you upload it and you get feedback from a live coach saying, hey, yeah, you can improve this. This is spot on. So you're going to get $49. You're going to get the first month for free, and then it'll be $49 per month, but you can cancel anytime you want. Also with the Dealmaker Mastermind is this deal deck I keep talking about, all right? And this is where you find a deal, and this is most likely a bigger deal, and you submit it to the deal desk, and we partner with you and raise the money. We had a lender a couple of years ago. He says, hey, for $6,000, I will introduce you to our high net worth investors, and you can see if you can raise money for that. And I thought that was a pretty cool deal. We didn't do it at the time, but I thought it was a pretty cool deal. But the thing with it is, well, I still have to nurture the relationship. I still have to raise the money. And here what we're saying is we're going to actually do the money raising for you, okay? $6,000 value easily, and you get the first month for free, and that's $49 a month. It's the most affordable, unique program on the planet. No one else offers this. I have a quick testimonial for you, but I'm going to skip it because I want to kind of get to the end of this thing, and I want to get to your questions as well. So I'm going to skip Patrick talking about how great this deal is, and it is pretty cool. Also, bonus number 5 is 2 tickets to our live event, the Financial Freedom Summit. And what this is also unique to us. No one else does this. It's a 2-day event where we simulate the purchase of a 69-unit apartment building. So you're going to work in small groups of 5, and you're going to go all the way from the process of finding, analyzing deals, making an offer, going through diligence, getting the financing, raising the money. You're going to be hands-on, working out a Dropbox with your small team to go through the entire process. We offer that twice a year. Our next one is actually in a couple of weeks, January 25th to 27th. A little short notice for you guys here. And we sell tickets to that for just $2,000. The next one is going to be in October sometime. So that's a $2,000 value. I'm giving you 2 tickets to that event. It's absolutely core for you to get that experience. You get the knowledge through the course, you get the support through Dealmaker Mastermind, and then you get the experience through the Financial Freedom Summit. So really, really excited about that. So here's what you're getting. You're getting $25,000 of value of just the multimedia course, and then you're getting these 5 bonuses, total value of just under $37,000. Now, I'm not going to charge you that today. Obviously, that's not everybody has $30,000. But what if I did? I mean, if you could pay $37,000 and you had a really high degree of confidence that within the next 1 to 2 years you can quit your job forever, would you invest $37,000 in that? Well, maybe. You got to ask yourself, I mean, how much is your financial freedom worth? And you already know you got to invest in something in yourself so that you can actually achieve that goal. But is $37,000 really outrageous? Maybe not. Okay, but not everybody does. So there's $37,000. I also know that a good number of people who brought us deals through the deal desk, and we've closed over 1,000 units, 10 deals through the deal desk. I already know about knowing them now. They never would have had $37,000. Okay, but they did have $2,000, and that's the price of this program for this call and this audience. Just go to the michaelblanc.com/special and sign up for that right now. It's $19.97 one-time payment. And if you don't have $19.97, that's fine. You can also do 5 installments of $475. Okay, so you can get started right now and just make 5 payments. It's themichaelblanc.com/special. Now, look, I'm not in the business of taking your money. We have a 30-day unconditional money back guarantee. And you guys ask around me. We have a very good reputation in the market. If you, for any reason at all, decide it's not for you, just contact us. I might ask you why, so we can try to make it better, but I'm not going to hassle you for the return. So if you want to check it out, just sign up. And if it's not for you, just ask for money back. What I want, guys, is I want to change your life, okay? Make some money in the process, that's fine, but it's not satisfying to make money and you don't change your life. The thing that drives me absolutely batty is people who actually invest in the money and then not do anything with it. Okay, and I don't want you to do that. I want you to invest in this thing, and I want you to start working this because it definitely works. It works for a lot of other people. I have a special offer for you guys also, because sometimes we put things off and we say, hey, I'll do it tomorrow. I'll see what else comes. But what I'm going to offer you is, and I don't do my own coaching anymore. We have quite a few students, and we have a pretty sizable coaching or mentoring team. So I don't do my coaching anymore. I can't afford to do it. But for the first 10 to sign up here on the summit, you will get 2 free laser coaching calls with me. That's 2 20-minute sessions, a total value of $1,000. But I can only do that for the first 10, and I love doing it. I just don't have a lot of time to do it. So if you're one of the first 10 to sign up, I would suggest doing it right now. Right before we get into QA, go to themichaelblanc.com/special and go ahead and sign up for that. So here's kind of all what you're getting is you're getting $37,000 of value and financial freedom in a box, $2,000 or $475. I'm going to get the questions here in about 2 minutes. I want to get there at 10:30. But I want to just put things in perspective a little bit because it is a bit of an investment. You're going to get this money back with a major return once you do your first deal. This is Philippe that we saw earlier. You have these things, acquisition fees, right? When you do a deal and you close, you actually pay yourself an acquisition fee. Philippe joined the program and 5 months later brought us an 80-unit deal through the deal desk, and he got a $33,000 acquisition fee. He got a 15x return on his investment. And that doesn't count the cash flow he got and the equities build up and the 2 other deals he's already done since then. Okay, I'm not even counting that. I'm just saying, hey, what's the 6-month ROI? It was 15x. Now, Bruce Frazier, great guy, who's one of our early students. It took him 2 years and 3 deals to build up $15,000 in passive income. Is that pretty cool? Okay, I mean, think about what that could mean for you and your family. I mean, what does financial freedom really mean to you, right? I mean, to me and many others, it means that you could do whatever you want, when you want it, with whom you want. Okay, you can pay for your kids' college education. You can shore up your retirement. And this is kind of where I'm asking you to decide. And this quote I find is very, very helpful. This is a quote by Pastor Andy Stanley. It is your direction, not your intention, that determines your destination. This really means it doesn't matter what you want. It really means what you're doing. Where are you headed? What's the motion? Where's the motion going to? And so I ask you right now to really think about what you want in life. If you want something, if you don't want to be in the same spot this time next year, you have to do something right now. You don't have to do anything right now. It's just that you'll be in the same spot this time next year. But if you want something different, you got to do something. And so you have to decide right now, are you in or are you out? If you're out, that's fine. I look forward to staying connected with you. No hard feelings for you. But if you're in, you might be biting your nails right now. Oh my gosh, is this right for me? It's a lot of money. Is it the right thing? Sign up. Okay. You can always return the product. I know you're not going to. You can always return it worst case. Okay. But I want you to sign right now. If you really want to be out of your job in the next 1 or 2 years, then decide to sign up right now. Go to michaelblank.com/special and sign up. And now we're going to open up for questions. So type your questions in the chat box. We got about 50 minutes to do the questions.
Well, don't put them in the chat box. Put them in the Q&A box. So I have a list of questions already ready teed up for you. So I'm going to kind of tee up a couple of questions here and have you answer them. So Penny has a question. And just for those of you who are listening, I did go ahead and put in the chat box the link to go ahead and sign up for Michael Block's program there.
Thank you, Dan. Appreciate
so you
it.
can just follow that.
Yeah.
And if you're on the mfinforum.com, we'll also have the links put up there as well throughout the day. So you can actually follow those later on. But Penny has a question of how do you still sound authentic when you are a newbie? And I believe she was referring to talking with investors or maybe talking with brokers.
Well, we just talked about that, Penny, right? How do you sound authentic? Well, you are authentic because you've gone through a training course. You know what you're talking about. You've analyzed 5 deals. You know what you're talking about. You've built a team. You've talked to your property manager. I mean, you are absolutely authentic, and you're sounding confident.
And James has a question. It says, is there a limit that you set for newbies as to how big of a property to buy for your first few deals? Would it be bad for me to buy a 100-unit deal if I'm just getting started, but it's a good deal?
So what I would advise is the following. I think you should go on 2 tracks. And by the way, before we get into Q&A, because I do this quite a bit, and I'm going to answer all your questions until Dan tells me to go home. But I am, again, and I answer your question in a second, Dan, but I am definitely in the life transformation business. And there's some of you guys who are thinking of signing up but are not sure. I want you guys to ask questions, Dan, and I want you to pick out the questions to help people make a decision on this stuff. Because we can talk tactical all day long, and I'm happy to do so, but it's not going to get you any closer to a decision. So look at some of those questions where people are maybe on the fence about investing in themselves and see if we can highlight some of those. Sure. I found that to be helpful as well. So to answer your question, I always advise people to go on 2 tracks. Find the one deal that you think you can syndicate yourself. And when you get very clear on your first deal, whatever your personal situation is, you think you can raise $200,000 and that can get you into 10 unit. Great. Look for that. While you're looking for that, keep your eye open for bigger deals. Keep an eye open for the 100-unit deal. And if you come across a deal, underwrite it to get practice. And if it's a really good deal, then bring it to me. Okay, because I will then partner with you on that deal or bring it to someone else. The value of a deal that you have underwritten, pre-negotiated, possibly on a contract is valuable. If it's a truly good deal, people will want to joint venture on that deal, and so you can monetize that. So I would advise that you go parallel on both tracks while you're raising money as well.
Great. Another question here is about your program is, does your program walk through a more detailed underwriting, and does it walk through every aspect of due diligence?
Absolutely. And the other related question to that is, am I going to upsell you to some kind of coaching program if you want the real information? The answer is no. Everything is in this course, okay? There are plenty of people who have quit their jobs with this course alone. We do have a mentoring program, and it's an option for you if you want it. Some people are in the position and really want it, and it's an option, but there's nothing that's held back in the Ultimate Guide program.
And you mentioned that you help people raise money as long as it goes through the syndicated deal analyzer, deal desk, or whatever, right?
Well, first of all, you're going to learn how to raise your own money. If it goes to the deal desk, yes, it has to be submitted in the SDA, but since you're going through the program, you're going to use it anyway.
And are there certain criteria that you guys are looking for at the deal desk to make sure that it's fitting certain criteria? Yeah.
If you look at that about tab, the green light, red light, if most of those things are green, the chances are it meets our criteria in general.
Okay. So I think I've seen your analyzer before. So as you're filling it out, those kind of pop red, green, that kind of thing.
That's right.
Yeah. All right. Cool. And let's see here. This one's a little more tactical. It's about if you find a good deal on LoopNet out of state, should I find a local broker to present the offer or present the offer myself or just use the same listing agent to write the offer?
Yeah, in commercial real estate, oddly enough, there's no such thing as a buyer's agent, unlike residential. So the listing broker will also represent you, essentially.
Do you with your program, do you also have opportunities to maybe get some people some experience by helping, having them help you raise money for some of your deals?
Yeah, and that's exactly right. And this is the exciting thing about that. We joint venture with deal finders, where we talked about deal desk, but we also joint venture with money raisers. And Dan, you and I are talking about joint venturing in that same way. And we have had former students who have gravitated towards the money raising side and really feel there's more opportunity, or maybe don't love the idea of analyzing deals or making offers. And they've focused on the money raising aspect. So if that's you, for example, the education is still the same. You still need to know the ins and outs of the multifamily investing process so that you can appear confident to your investors. But then you gravitate more toward the money raisers, and you raise money for us, you raise money for Dan, and you bring that money into the partnership.
Do you ever have deals that you guys maybe don't look at because maybe they're a little bit too small for your group or something like that you can turn over to some of your students?
Yeah, and that's starting to happen as well. I'm trying to formalize that a little bit more, where we kind of create networking environments where accredited investors, for example, or money raisers can network. We have not worked out. That'll be a for premium kind of thing. And so that's what we're thinking about. So if we don't accept the deal because it's too small or it's too rural or some other reason, we can still expose you to a network of high net worth individuals or money raisers.
Okay. Good. Let's see.
Let me say that, but you can still do that by attending our events, for example. The network is awesome, or by attending other people's events where the networking is really, really good.
Where is your event? I think you said you have one next week.
Yeah, it's January 25th or 27th. That's the next opportunity. So if you were to sign up, and you can still, we still have probably about 15 slots left. Right now, it's going to be a smaller, it's a kind of a closed conference. It's not this, beginning 101 thing. It's a 202 thing, because I'm expecting you to have gone through the course so you know how to use the SDA, you know what a contract looks like, because you're going to be asked to do it. So it's January 25th to 27th in Washington, D.C., and they will always be in Washington, D.C. It's a great venue. That's where I live also, in Northern Virginia.
It's another good reason to do it in Washington, D.C.
That's right. One less reason to travel, Dan, you know what I mean? But it's a great venue. And we do it twice a year.
What do you charge for that if somebody just wants to attend that event instead of the entire program or something?
$2,000.
$2,000. So pretty much the same price.
It is.
Yeah. So if you want to go to that, I mean, I am looking forward to going. I don't know if I'm able to make it next week, but I am planning on getting to one of yours, because yours is one of the only events that I haven't been to, but I've seen you speak at other events, and we've shared the stage together a little bit too there. So another question here is, let's see. Can you share with us your favorite current markets and maybe how you do some of the research besides just the Census Bureau?
Favorite markets are markets that are obviously growing, but have some resemblance of higher cap rates. So some of those markets where we have assets is Memphis, Alabama, so Birmingham, Huntsville. We have an asset in Chattanooga. It's a bit of a small market. Jacksonville, we've had some activity in Oklahoma City, Indianapolis. Some degree in Cleveland or Cincinnati, so less of a degree. So I would say in the middle part of the country in the Southeast is where a lot of the activity is happening. Some of the bigger markets, Atlanta, of course, Dallas, Houston, really, really, really very competitive. Doesn't mean you shouldn't be in those markets. Those are still great markets. It's just that a lot of people are looking in those areas as well.
If somebody joins your program today and buys it, they can get to come to say the event next week, what does it cost to go to another of one of those types of events?
Well, if you invest now, you have the 2 tickets, right? So if you don't make it in January, then you're free to join us in October. And then we have a fairly low alumni rate. For the really slow learners, they can come by for a much reduced rate the second time around.
Okay, good. Or just like a refresher, or a network with other investors or something like that.
Exactly.
Because let's see here. What type of personal contact is there with your program, and how much personal attention does one get when someone that talks you through different deals,
None.
Okay. Good answer. Hey,
the only interaction you'll get is with a deal maker mastermind. You will get an interaction with one of our mentors on your analysis, and you can interact with other people. But the reason it's only $2,000 is because there's no personal interaction, right? Except for the event. Sure. The event is highly personal, and I'll be there. I'm teaching. I'm doing all the teaching, and we'll have some coaches there. So I shouldn't say none. You get 2 days with us at the event, which is the power of the event. But it's not like you can't call someone up and get an hour of free coaching. That's we have that available, but it's not free.
And maybe one of these days, Michael will invite me to come speak, but we'll see.
Well, there's no guest speakers at the Financial Friends Summit, but the Dealmaker Live, we're just starting that process now. So
Oh yeah.
You and I will be talking about that.
Sure, sure. Not to put you on the spot or anything, but James Gleason says, do you recommend syndicating when you can, or is it just as good to get money from one source for your deal? Would it be bad to get hard money for it and refinance later?
No, man, it's not bad. I mean, there's a UPS truck driver. That's how he got started. He got hard money for a fourplex. It was vacant. He filled it up, fixed it up, filled it up, refinanced it out, and did it again. So there's nothing wrong with that. I don't love hard money for a variety of reasons. I don't want to go on a rant on hard money, but hey, it's possible. It really depends on what your risk tolerance is. If you have a guy, he's got a lot of money, and you partner with him, partner with him. That's great. It doesn't really matter. Look, you got to look for ways to get in the game, and there's so many different ways you can do it. There's seller financing, there's bridge loans, and whatever you need to do to get it to work, get it to work. And don't say, I can't do this. Ask yourself, how can I do this? The much fundamental shift in thinking.
Next question here is about, I've been hearing and reading from some syndicators and online forums that multifamily prices in certain areas are reaching a bubble territory. What are your thoughts on that, and what are you putting into your underwriting to hedge against this on exit, or even on the entry, for that matter?
So don't buy on a bubble price. Okay, don't do that. Which means you're gonna have to hustle. It's not like they're gonna fall in your lap. Okay, and you got to stick to your underwriting. And so what I see people do is two things. One is they don't know how to underwrite. They don't have the syndicated deal analyzer and the training. So that's a problem. Number one. And number two is don't compromise your underwriting criteria. Don't say, oh, I'm gonna compromise this, I'm gonna compromise that, just so I can get into the deal. Don't do that. So that just means that you're gonna have to hustle. And I talked about that earlier. You can't expect to make a half dozen offers and then get one accepted. It doesn't work that way. What also happens is when you start looking at a lot of deals, you start interacting with a lot of brokers. What's going to happen after about several months is they're going to call you before they list something. Kind of this pocket listing or this pre-listing stage where you've been really interacting with them. You've great feedback. You're obviously competent. You're invested in yourself. And they're going to call you a week or two early before they list something. And they're going to give you access to a deal early. And that's where the magic happens. And then there's no bubble price because you're not competing. You don't have a Marcus Millichap guy running up the price. You're dealing directly with one seller, and that's it. And that's really where the magic happens. So the answer to that question really is hustle, number one. It's been like that for years, guys. There's nothing new about that. And number two, sticking to your underwriting criteria. It's really that simple.
I've been hearing, this is from James Gleason, I've been hearing that banks are starting to not fund for multifamily deals. What are your thoughts?
I've never heard that before.
I haven't either. It might be some local banks that might be doing that in certain markets, but as far as some of the major lenders, Fannie Mae, Freddie Mac, and the bridge lenders, they're lending on these things with no problems.
Exactly.
If a lender doesn't want a loan on a deal, it's probably because it's not a good deal.
Right, and it's not multifamily in general, so yeah, it's probably deal specific, and there's probably a good reason for it.
Yeah. All right, so I'm going to ask one more question here. I know there's a couple of these that are coming on and that we will probably cover in future sessions, but the last question here is, let's see, I got 4 of them that just came in, so I'll go with the first one that came up and see what we do here. Analyzing a 60-unit deal with an owner, this is Bill Keast, that provided 2 years financials that are in the 70% expense range. This is off market with the seller direct. Should we focus more on the actuals to make an offer or focus more so on market expense ratios?
If the actuals provided are higher, you use that. If the actuals are lower than the rules of thumb I talked about, then you throw away the actuals.
Good.
So 70% expense ratio, use that.
Yeah. All right. So I want to finally, since we're wrapped up here with the question and answer time, thank you, Michael, for spending the time with us this morning and taking time out of your busy schedule to be with you here on the summit. Thank you for helping us promote the event. I know a lot of people are on here; they are following you and have been sitting here because of you. Thank you for that. And any final parting words before we go?
No, guys, I just want you guys to be very clear about what you want in life, and then just make it happen. Just start moving in the direction that you want. So, Dan, thank you very much for having me on this a great conference. Amazing group of people that you have come, you invited here. So everybody on here, make sure you consume as much as possible because Dan assembles a really, really great faculty. So thank you so much, Dan.
Yes, thank you as well.